Greetings, YouTube friends. In today's video, we're deep diving into the fascinating world of gold. We'll explore time and price analysis on gold across multiple time frames, from a broad macro perspective down to what the next few weeks may hold. Whether you're looking to refine your long-term strategy or make informed decisions in the coming days, I've got you covered. Let's look at some charts. Okay, let's get started with the 6-month continuous contract gold futures chart. Gold futures started trading January 2nd, 1975, so we have all the price action for gold futures here. As you can see, I'm tracking two primary patterns on the 6-month chart. This is giving us my macro view of gold. So we have this rising wedge, which is outlined with the blue lines here. And then we have an ABCD pattern that comes to completion between January 1st, 2026 and July 1st, 2026, with a target of $3,100 and $3,100. So that kind of guides the overall perspective, which is that I am a long-term gold bull. However, I do think it's important that we take a note of where we're at currently. So currently we have bumped into, let's zoom in a little bit. We've bumped into the top of this rising wedge. And so far for the past two 6-month bars, we have not been able to close above that rising wedge. So let's zoom into the monthly and take a look, because I noticed something pretty important when I was doing my analysis this week, which is that we have a TD9 count, which is the Tom DeMark indicator, and a sell signal on the monthly chart. These bands are the Bollinger Bands, and the Bollinger Bands measure standard deviation. And we are currently very close to 3 standard deviation from the mean. And most assets do not stay at standard deviation from the mean for very long. So if you notice when we wicked above here, we came down, and then we came really close here, and we had the sell signal here, and we came down. So this is a pretty big, pause or caution for the bulls right now on the shorter term timeframes, and that would be the monthly to the weekly chart. We also have the same sell signal printing on the weekly chart, which we'll take a look at in just a minute. Let's hop back over to the 6-month chart. So I threw in some targets here. If we were going to trade this is what I would be looking for. I would be looking for a top to come in between now and the end of September. And then I would look for to gauge the strength of that pullback when it comes in. So I ran some fibs here. So we ran from the last 6-month low to the current high. And I would be looking for either a bullish hold at the 0.382, which would be 2305, or I would potentially be looking down to the 618, which is 2,145, or we might test the low of this giant rising wedge at the 786 retracement, which would be $2,029. These are the targets that I'm looking for if we are to see a reversal in gold. Let's take a look at the weekly chart. So we also have a TD9 count printing a sell signal that came in on August 26th on the weekly chart. So that is noteworthy. Let's quiet that down and take a look at my time cycle pivots. So something that I do that is special to my work is I measure planetary time cycles from different moments in time. And I use a software called Time Trades. So if you're interested in learning how to measure planetary time cycles, I'll put a link in the video description below to the software that I'm using. So these are time cycle measurements from particular swing highs and swing lows. And what they do is they allow me to project forward into time the moment where we're going to see a change in trend. As you can see, they're fantastically accurate. And the last one that we bumped into here was August 19th. And that we found it was a short-term pivot high for now. So we're bumping into our next time cycle pivot on September 9th, well, the week of September 9th. So this is the weekly chart. So we'll be looking for a daily pivot the week of September 9th. All right, let's take a look at these. These are called analogs. An analog is something that is like something else. So they're future projections of price based on prior time and price cycles. So what I'm seeing here that we have incoming is we have a very significant move in one direction or the other. And that means that what we need to do is we need to decipher the direction, and we need to lay out a if-then scenario for how we're going to enter that trade, because I see this as a trending trade opportunity that is going to last from October to December. So that's a great opportunity to get into a trade and let it ride. Remember, I'm macro bullish on the high time frames, the 6-month time frame. But then when we zoom down into the monthly and the weekly, I start to see technical indicators that give me pause as a bull. So I'm not necessarily saying I'm bearish either. I'm just taking note. It's almost like a column, like check marks for the bulls and check marks for the bears, because I want to catch this trade one way or another. I don't actually care which way it goes. I just want to catch it. So let's look at the daily chart so that we can set up how we're going to catch that trade. Okay. So on the daily chart, I also have daily time cycle measurements, and those will load up here in a second. They're a little bit slow to load. So these are the daily analogs, and I have 2 primary daily analogs. Oops, sorry about that. Let's move this one out of the way, but this is a third option that I haven't entirely ruled out, so I'm going to name it here in just a minute. So the point in time in which we are going to, in my opinion, be able to decipher the trend going into the end of the year is going to be the week of September 17th, 2024. And so I have labeled that here, that this is the test. This is the directional test here. And so if we are making a high the week of September 17th, it is very likely that we are going to see the bullish analog play out. I would say actually it's almost guaranteed that we would see the bullish analog play out if we're getting a high here on September 17th. And in that case, what we would be looking for to do would be to buy the higher low that would come in the week of September 23rd. And we would position ourselves for on the long side for a trade into the end of the year. If we're going to see a bearish scenario play out, then this is the bearish analog, the red one down here. As you can see, we would actually see a low come in the week of September 17th, and we would be looking for to sell short or buy puts in whatever your trading instrument of choice is, the lower high relative to the last daily high. So that is the setup that I'm looking for to define my entry. And remember, those key dates. The key date is September 17th, the week of September 17th. We'll be looking to see if we're making a high or a low. And then the week of the 23rd through the 27th, we're going to be looking to buy either a higher low or a lower high. Let's take one last look real quick at this is the rogue analog that I haven't ruled out completely yet, although it's not my bias. I just want to name it. So in this case, this one is a little bit different. In this case, we would make a low, but we would make a low by the end of this week. And then we would see a major move up next week. Ultimately, still, let's see. This is the part where I wanted to name it where it gets a little confusing, because we would be putting in a high around the same time that we would be putting in the high for the bearish analog. The difference in these 2 analogs here is that in the bearish analog, after we put in the lower high, we would see continuation back to the downside. And in this analog, when we come up here, we would make a higher low and a higher high. So for me, I'm an active trader. I'm going to be watching price action every day, and I'm going to be setting my stop losses and taking profit to get risk free so that I can have my position established. I'm also totally okay with needing to take a couple stabs at this, because this is a trade that I expect to play out into December. And I have to say, given all of the bearish counts that I'm seeing, I don't know if I would say I have a bearish bias necessarily, but I am definitely on watch for the bearish scenario. So, all right, everybody, that sums up my outlook on gold, and I will make an update to this post as we move through the next key dates. We will be looking to see where we're at on the 17th of September, and then we'll be looking for that entry the following week. All right, friends, trade smart.